This is one sector you need to invest in today.
We're in the money. We're in the money.
Hi, everyone. I'm Mark Lichtenfeld, Chief Income Strategist for the Oxford Club. Welcome to State of the Market. The other day, I commented on a social media post about oil prices, and I said that I expect demand for oil and gas to stay strong for decades. And as usual on social media, that prompted a political response from someone claiming that the government will tax us into permanent recession, curbing the demand for oil forever. That's ridiculous.
Inconceivable!
Another person commented that EVs are going to replace all gas-powered cars in the near future. They won't.
It's inconceivable!
And that's coming from someone who owns an electric vehicle. In fact, I love my EV.
I'm in love with my car.
By the way, that is a very underrated Queen song, even though it doesn't really feature Freddie Mercury. Go figure.
What about me?
Not with those teeth, mate.
But listen to the whole thing when you get a chance and really listen to the lyrics. You'll thank me. Okay, back to investing. New technologies are being developed all the time that are alternatives to oil and gas, but the reality is the world still operates on oil and gas. Over the last 40 years, the only years global oil consumption didn't rise was 2008, 2009, and 2020. I wonder what happened in those years.
I think this is the most significant financial crisis.
But now it's official, we are in a recession.
As the toll of the coronavirus widens here in the U.S.
We're going to call it a pandemic.
You can see consumption of oil is on a steady increase and shows no signs of stopping. In fact, this year it is estimated that the world will consume 12.5% more oil than it did just 10 years ago. And that's with the increase in popularity of EVs and the prices of solar and wind energy coming way down. This year, oil consumption is forecast to rise 1.4% with an equal rise in production. But that's with a global GDP growth number of 2.2%. If we don't get that recession that everyone is calling for, and there is hardly a guarantee that we will, demand could be much higher. Despite how pleasant flying is,
we're going to do what we like to call a JetBlue how do you do, which is slang for dumping a bunch of fuel in the ocean.
The booming global middle class wants to travel. 2 airlines in India, for example, may buy up to 1,000 planes combined in the next few years. And in China, airlines are on a hiring binge, which suggests more air travel is expected in the world's most populous country. It will take a lot of oil to keep those and all of the other packed planes in the air. But it's not just jet fuel that will see an increase in demand. By 2045, the world is forecast to consume 27.1 million barrels of gasoline per day versus 23.8 million today. Diesel fuel will rise to 29.6 million barrels per day from 26.3 million, and ethane, which is a key ingredient in plastics, is projected to see a rise to 15.2 million barrels per day from 12.2 million. So I believe energy stocks are going to be a great place to invest for the long term, and the best part is many pay big dividends. Some of the oil giants like ExxonMobil and Chevron pay more than 3%. A lot of the pipeline companies like Energy Transfer Partners have big yields, some even approaching double digits. Now, if you're going to be a successful investor, you're going to need long-term exposure to the energy sector. And for more information on where I believe the best investments in the sector are, click the link at the bottom of this video. Thanks for watching State of the Market. I'm Mark Lichtenfeld.